Are you ready to navigate the financial landscape with confidence?
In this video, we're breaking down critical insights from leading analysts like George Gammon and Stephan, renowned for their financial expertise.
With their deep knowledge, we've harnessed AI to summarize their key findings, ensuring you save time while staying informed.
Join us as we unveil strategies for success in a volatile economy, starting with George Gammon's take on Wall Street's latest moves.
Today, we're delving into George Gammon's analysis regarding a significant bet made by Wall Street insiders, which is reminiscent of the strategies discussed by Michael Burry.
Burry's forecasts provide crucial insights into the current volatility and risks within the market.
George emphasizes that investors must navigate considerable risks. Insights from Michael Burry act as a cautionary tale.
Burry underscores the necessity of strategic adjustments during these turbulent market conditions. George discusses how increased volatility is expected as economic conditions shift.
Burry's predictions regarding potential downturns highlight the necessity for careful investor strategies. The trillion-dollar bet signifies Wall Street's confidence in projected market downturns.
Investors may need to rethink traditional strategies given this profound shift.
What predictions can we garner from George's analysis regarding market trends?
He suggests that market forecasts point to a potential downturn significantly influenced by these insider moves.
George advises investors to stay vigilant with market signals and changing economic indicators.
Ultimately, the discussion emphasizes the need for adaptable strategies during uncertain times.
Today, we're reviewing Stephan's analysis of projected average net worth by age in 2025.
Graham highlights various misconceptions about what individuals should expect at different life stages and the strategies needed to achieve those goals.
Stephan challenges the typical assumptions about average net worth by emphasizing that many people overestimate what young adults are actually accumulating.
He points out that late career earnings can greatly skew averages, making goals feel unattainable for younger individuals.
How does Graham break down net worth as it correlates with age?
Graham explains that average net worth increases steadily with age, but he stresses the importance of starting financial planning early.
What investment strategies does Graham suggest to enhance net worth?
Graham advocates for early investing in various asset classes and emphasizes the critical nature of diversifying one's portfolio.
What predictions does Graham make about the financial landscape leading into 2025?
He predicts that economic changes could reshape average net worth dynamics, urging individuals to prioritize financial education and proactive investing.
Ultimately, Graham concludes that individuals should start planning and investing as early as possible to set themselves up for long-term success.
Furthermore, he emphasizes the value of financial literacy in navigating personal finance today.
Today, we're diving into recent findings by real estate analysts featured on Realtors Consulting regarding a noteworthy spike in canceled listings.
The discussion delves into the implications of this trend for buyers and sellers in the current housing market.
Analysts from Realtors Consulting highlight a 50% increase in canceled listings, indicating a significant shift in the market.
They emphasize that understanding the causes behind this spike is crucial for navigating the current real estate landscape. The analysts suggest that rising interest rates are a primary factor cooling buyer enthusiasm.
Is this leading to more cancellations?
Absolutely. With higher rates, buyers are reevaluating their options and many are stepping back.
The analysts discuss how sellers are adjusting their expectations in light of these changes.
It's a challenging time for sellers. Many are forced to reconsider pricing and strategy.
Looking ahead, what do analysts predict for the housing market?
They foresee continued fluctuations in cancellation rates if interest rates remain high.
Are buyers likely to hold off on purchases based on these trends?
Yes, and we might see an uptick in rental demand as some buyers choose to wait.
In conclusion, navigating this changing market requires adaptability from both realtors and buyers.
The discussion reinforces that staying informed and flexible is key for all market participants.
Welcome to another discussion today with Emily Brown on the current challenges in the equity markets.
Emily highlights the major risks emerging from rising treasury yields and inflation.
Emily Brown indicates that current market indices are likely overvalued and may face a downturn.
This view aligns with the increasing volatility noted in recent market observations.
What insights does Emily provide about rising Treasury yields?
Emily emphasizes that rising yields elevate borrowing costs, thereby affecting equity valuations negatively.
How is investor sentiment evolving as per Emily's insights?
Emily notes that many investors are transitioning to cash positions as a precaution against potential downturns.
What predictions does Emily Brown share regarding market trends?
Emily anticipates a correction within the range of 15% to 25%, coupled with sustained volatility.
Emily advises keeping a close eye on Treasury yields and market indicators.
Moreover, investors should be ready to adapt strategies to navigate the expected market changes.
Welcome to today's discussion, where we delve into the market analysis presented by Emily Brown and her insights with David Lin.
Emily stresses the dangers of market corrections tied to rising Treasury yields and changing investor sentiment.
Emily Brown points out that the markets currently seem overvalued, posing risks for corrections.
David Lin agrees, underscoring the need for investors to stay alert regarding market indicators.
What does Emily say about the rising Treasury yields?
Emily indicates that higher Treasury yields lead to increased borrowing costs, placing pressure on risk assets like stocks.
What trends in investor sentiment does Emily mention?
Emily observes that many investors are increasing cash positions as a safeguard against expected market volatility.
What market correction prediction does Emily provide?
Emily suggests a potential correction could fall between 15 and 25% with ongoing volatility.
What does Emily project for market trends ahead?
Emily foresees ongoing volatility, urging investors to remain cognizant of market changes.
Emily stresses the necessity for investors to watch Treasury yields as they navigate future market landscapes.
She further advises that a grasp of economic indicators fosters sound financial decisions.
Today, we'll dive into Michael Pento's analysis on the massive asset bubbles that may jeopardize our economy.
Pento's insights focus on critical economic indicators that investors need to track.
Michael Pento points out three primary asset bubbles that could pose serious dangers to the economy.
He asserts that the real estate market is currently experiencing unsustainable price growth.
Pento expresses concerns that the rising levels of corporate debt could threaten financial stability.
Lastly, he indicates that stock market valuations have reached unprecedented highs.
Pento remarks that the current state of the real estate market shows worrying signs of overvaluation.
He suggests that a burst of this bubble could adversely affect household wealth.
According to Pento, the increasing corporate debt is unsustainable and may invoke defaults.
He warns that as interest rates climb, the financial strains on these entities will deepen.
Michael Pento alerts that stock prices are reaching unprecedented levels against earnings.
This situation raises valid concerns about an upcoming significant market correction.
What does Michael Pento foresee regarding the fallout from these asset bubbles?
Pento predicts substantial financial losses for investors if these bubbles burst, leading to a reassessment of their strategies.
Pento stresses the importance of cautious investment and diversification.
He also advocates for vigilance regarding debt levels and market valuations.
What an incredible discussion we've had. Each expert brought something unique to the table.
Yes, absolutely. Michael Pento really highlighted some serious economic risks with those asset bubbles.
And Emily Brown painted a stark picture of what rising Treasury yields could mean for market corrections.
Right, it's a delicate balance. But I was surprised by her prediction of a pullback of 15 to 25%. That's substantial.
That creates quite a tension, doesn't it? Pento seems more focused on strategic awareness rather than specific timelines.
Exactly. And it's fascinating how Stephan emphasizes financial habits while the analysts point to real estate dynamics.
So between all these insights, it's clear why we must stay vigilant as investors.
Definitely. And for everyone watching, if you found these insights valuable, be sure to hit that like button.
And don't forget to subscribe for more top-notch analyses from experts to keep you informed.
Next up, we'll dive into global trade dynamics, so stay tuned for our next video.
Thanks for watching, and don't miss exploring more content from our channel.